Hi, everyone. Welcome to today's webinar. My name is Jason Q. I'm the managing attorney for nonprofit and small business legal assistance programs at the DC Bar Pro Bono Center. Today's topic is starting a small nonprofit, a guide to IRS Form 1023. Before we get going, just a few housekeeping items. For those joining us live today, you'll see on your GoToWebinar client an option to download the slides. It's the little document button on your GoToWebinar panel. That's how you can get a copy of today's slides. And also there's a questions panel. If you'd like to ask questions during the presentation, please feel free to type your questions in there. I will keep an eye on the questions and turn to them periodically throughout the presentation. Please don't worry if I don't get to your question right away. I will turn to it when we have a break in our conversation. There's a lot of content that we're going to get through today. It's a jam-packed session, so strap in, but please do keep the questions coming if there's something that you'd want to get some clarification about. Let me begin by telling you a little bit more about us at the DC Bar Pro Bono Center, especially our nonprofit legal assistance program. The nonprofit legal assistance program offers brief advice, ongoing pro bono matches, and education and training on legal topics to nonprofits in the DMV area and beyond. We sponsor trainings, webinars, and multi-session courses on important real-world legal issues facing nonprofits. We host virtual and in-person legal clinics to address specific issues like governance, policies, risk management, intellectual property. We provide written resources on our website. The link to the website is there, lawhelp.org/DC/NPSB for nonprofit small business. And we match nonprofit organizations with pro bono legal counsel for larger legal projects. So if you have, a bigger legal matter that can't be addressed in, let's say, a 1-hour brief consultation, we can help you look for volunteer attorneys who can take you on as a pro bono client to assist you with, let's say, revamping your governance documents or purchasing a piece of real estate or drafting a series of employment policies. I think for a lot of us today on the presentation, we have a lot of people just starting their nonprofit journey, a lot of folks who are thinking about creating a nonprofit organization or who maybe have just started in the earlier stages of creating a nonprofit organization. So that match program might not be what you're looking for yet, but keep us in mind down the road if you encounter kind of a larger, more substantial legal project down the road. I'll give one really quick plug for an upcoming training that might be of interest to folks here in the meeting. We do, over the course of the year, a training course called Board Basics. It's an introduction to serving on a nonprofit board run over 3 consecutive Saturday mornings. Our next Board Basics training is currently recruiting. So if you go to our lawhelp.org/DC/NPSB website, you can find a list of upcoming events on the right-hand side of that page. So Board Basics is a great resource for those of us who are starting nonprofits for the first time, or if you're serving on a nonprofit board for the first time. Okay, let's see here. And then the last thing that I wanted to plug on our website was our Starting a Nonprofit resource collection. That resource collection includes a really useful sort of like 20-page A to Z guide on the legal process for starting a nonprofit in DC. And then it has a host of additional webinars and resources on stuff like fiscal sponsorships, governance policies, bylaws, anything that you sort of need to know about starting a nonprofit, including a lot of the topics that we'll touch on today, but not focus on, because our focus today is really on the Form 1023, the 1023, the form that you use to apply to the IRS for 501c3 status. Okay. That's sort of enough housekeeping. Let's get to the good stuff. I want to sort of set the stage when we talk about the Form 1023 application for 501c3 status. I want to situate that application in the broader nonprofit formation process. All right, so let me give you a little bit of background. First, when we're talking about 501c3 nonprofits, what are we actually talking about? So our focus today is going to be on 501c3 public charities. It's a specific type of nonprofit organization, but it's probably the kind of nonprofit organization that you're attempting to create if you're starting a new nonprofit. Public charities include arts, cultural, environmental, and humanities organizations. They include educational and advocacy organizations, healthcare related, human services related, and a host of other topics and areas. It's sort of the classic nonprofit form. Public charities account for over 2/3 of all registered nonprofits. And the reason that they're so popular is that 501c3 public charities enjoy unique tax and operational benefits. But on the flip side, all of their spending must ultimately support the nonprofit's charitable mission and activities. And there are also some operational limits. For example, 501c3s can engage in absolutely no election-related advocacy or intervention. There are actually over 30 other types of tax-exempt nonprofit organizations aside from 501c3s, stuff like private foundations, chambers of commerce, fraternal organizations, civic leagues. So these are not 501c3 public charities, and special rules apply to each of those categories. They are not the focus of today's session. We're going to be focusing on sort of the classic 501c3 public charity. Let me just break down some of the real specific benefits of that 501c3 status. So first of all, it's going to be a mission-driven organization. Nonprofits are required by law to pursue their tax-exempt mission, and there's no legal imperative to generate revenue or satisfy shareholders or any of the distracting stuff that can come from, let's say, a for-profit entity. So that means that your staff and your board are generally passion-driven and aligned with your mission. The entity itself is tax exempt. So that means that your nonprofit corporation is generally exempt from paying franchise or income tax, sales tax, use tax, property tax, other sorts of taxes. So that's a huge advantage financially over, again, something like an LLC or a for-profit corporation, which does have to pay most of those taxes. A unique benefit of 501c3s is that donations to the organization are also deductible for donors. So for donors like individuals or corporations that itemize and deduct on their taxes, the value of money that they contribute to 501c3 organizations can reduce their tax base and reduce their ultimate tax burden. So that's a unique benefit of C3 charities. It definitely makes it easier to fundraise and to get those donations. Aside from those private donors, there are a host of other dedicated funding sources for 501c3 public charities. There's government grants, government contracts, grants from private foundations, grants from other public charities, and for-profit corporate opportunities or co-ventures. So there's this whole universe of funding opportunities that are only available to C3s. That's another benefit of 501c3 status. Another benefit is that you have limited liability. So nonprofit organizations are independent legal entities, and therefore they enjoy the kind of benefits of being a corporation. It shields the founder and the leaders of the organization from a lot of liability. And nonprofits specifically enjoy additional statutory protections because you're a nonprofit, because you're trying to do good. In a lot of jurisdictions, including in DC, you get added liability protection just by being a nonprofit or serving a nonprofit. And then finally, there's a benefit that I think of as the 501c3 brand. And this is just the fact that C3s have been in existence for a very, very long time. Donors and the public recognize that 501c3s are subject to additional transparency and accountability mechanisms. And therefore, there's more trust and likelihood of support for organizations that have achieved 501c3 status. Okay, so this is the end game. This is the reason that we're talking about forming a nonprofit and filing the Form 1023. We're looking to get these benefits. I'm not going to get into the overall formation process. I'm just going to lay it out in a timeline to know when the 1023 application happens. Okay, so if we just have the germinative idea of forming a nonprofit organization, first we're going to recruit our incorporators and our board of directors. These are the people who are going to found and then also oversee the nascent organization. Then we're going to actually incorporate the nonprofit. This means that we go to either the DC Consumer and Regulatory Affairs Office, or if you're in another state, whoever your corporate incorporation office is, and file articles of incorporation. These documents are sort of the constitution for your nonprofit. They create a separate legal entity for the nonprofit. Third, we're going to adopt bylaws and governance policies for our newly created nonprofit corporation. Fourth, we're going to apply for an EIN number from the IRS, an identification number for the nonprofit to use when it's interacting with the IRS. And then finally, not actually finally, but step 5 is when we apply for 501c3 status from the IRS. So, I just want to show that there's a little bit of work that goes in on the front end before we even get to this 501c3 application step. We actually have to create the corporation and get most of our ducks in a row before we go to the IRS and apply for 501c3 status, which gives us all the most significant sort of tax benefits. After we get our 501c3 status, we actually have to go back to our local jurisdiction or our state in most locations to do some additional state and local registrations. For example, in DC, you have to apply for local tax exemptions from the Office of Tax and Revenue, and eventually you do have to get a charitable solicitation license from DCRA. So that's after you get 501c3 status. All right, so this is the timeline of the 501c3 formation process. What if we're just up to point 4, but we have not yet applied for 501c3 status? So before you file your Form 1023 and get your C3 status, all we have is a state or district registered nonprofit corporation. And I just want to spell out what that means. You can technically use that corporation to fundraise. You might be able to open a bank account. You could technically hire staff who are employees of the corporation. You could start conducting your programs and activities. So having the nonprofit corporation in place allows you to do a lot of the work and do a lot of the operations of the nonprofit. But without C3 status, we're not tax exempt, and donors cannot seek a tax deduction for their gifts to the nonprofit. Okay, so that's why it's really critical to get C3 status as soon as possible. We'll also not qualify for a lot of those grants and other funding opportunities that are unique to nonprofits if we don't have the 501c3 status. An exception here is that very, very small orgs with under $5,000 in annual receipts, so total money coming in under $5,000, churches and auxiliaries of churches are allowed to operate as sort of full-fledged 501c3s without having to file Form 1023. Okay, so I want to put that exception out there, but for most of us, we're going to need to file the Form 1023 to get 501c3 status. Another note is that once you're approved for 501c3 status, that status is effective retroactively to your date of incorporation. So there's often a gap between when you incorporate the nonprofit and when you finally get C3 status. As you saw a few slides ago, there are a lot of steps in between. Go back. So, between sort of step 2 and step 5, there could be a month, 2 months, 6 months, maybe a year, really depending on how long it takes for you to get your documents in order, for you to submit your 1023 application, and then what the processing time is at the IRS for 1023 applications. Right now, it's pretty long. So during that gap, you might raise some money and you might start to sort of tip your toes in the water and do a bit of operations. That's probably going to be okay because any money that you raise in that gap period will retroactively be deemed tax exempt funds once you get your C3 status, as long as you get the C3 status within 27 months. All right. All right, so that's sort of setting the timeline and the background. Now let's talk about the 1023 application and specifically the 2 types of forms that we can choose from to apply for C3 status. So a high-level introduction, nonprofits actually have 2 filing options when it comes to the 1023. You can either submit the 1023 EZ, the letters EZ, which is a streamlined form for smaller applicants. And small here is primarily determined by the size of your gross receipts and your assets. So that, again, that's total money coming in a year, and also looking at any assets that you might have. And then there's the standard Form 1023. This is the form for all applicants, including those that are not small enough to qualify for the EZ version of the form. This is a really high-level comparison between the 2 forms, the 1023 EZ and the 1023 standard. The EZ is a relatively simple form. It's about 3 pages. You actually file it online, so you click through a few more screens than that. But it's a short form. The IRS estimates that it takes 19 hours to fill out the EZ. I find that IRS estimates to be a little on the high side. I don't think it's going to take most people 19 hours, but that's the IRS estimate. And I just want you to compare that against the estimate for the full form, which is over 100 hours. So, you do see a real difference in complexity and length of the forms. The full form asks a lot more questions and also asks questions in a more detailed way. So in the easy form, as we'll see, we're going to click through every question in the form in a second. It's a lot of checking the box and giving really short yes or no answers. On the standard form, you're providing a lot of detailed narrative descriptions of your mission, your operations, your activities, your fundraising projections, and you're attaching a lot of additional documents. So definitely a difference in complexity. There's also a difference in cost. The easy is $275. The 1023 standard is about more than twice as expensive to file. And there's a difference in processing time. This has been sort of changing throughout the pandemic. The processing times have gotten longer. Right now for EZs, we're looking at 2, 3, maybe 4 months for the agency to process. It used to be a lot faster. Before COVID, we were seeing them come through in like 6 weeks, but we're going a little bit longer now. The processing times on the standard form have definitely gotten much longer, and we're looking at least 9 or 10 months, maybe longer, to get those forms, to get the 1023 standard processed. All right, so that's the comparison between the two forms. Now, to be able to file the easy, again, it's meant for smaller organizations with less gross receipts and fewer assets. So anyone who wants to use the form has to complete a separate eligibility worksheet before proceeding to the actual form. But I'll sketch out what the worksheet asks you. So the key rules for filing the easy are: you need to have under $50,000 in gross receipts for this year and the next 2 years. So basically for your first, the forecasting across 3 years, under $50,000 in gross receipts per year in each of the next 3 years. Gross receipts are money from all sources during a fiscal year without subtracting costs or expenses. Okay, so this is total money coming in: $50,000 1 year, $50,000 in year 2, $50,000 in year 3. We want to stay under $50,000 in those 3 years. For those organizations that have already existed and have already maybe done a bit of fundraising activities, you want to stay under $50,000 in gross receipts for any of the last 3 years if you have actual financial history for any of the last 3 years. Okay, so it's 3 years looking forward, and then also 3 years looking back, to the extent that you have 3 years to look back on. In terms of assets, you also need to have under $250,000 in current assets. So assets include cash, accounts receivable, inventories, the list goes on and on. It does include things like land, buildings, equipment, and other tangible assets. For those, we're going to assign a fair market value to those tangible things or other assets that aren't cash. And then when we put all that together, we need to stay under $250,000 in assets. All right, and then also there are some other limitations on the kinds of organizations that can use the easy form. Basically, the easy form is for those classic 501c3 nonprofit entities. It's not for foreign organizations. It's not for organizations that are LLCs or for-profit entities that are trying to become nonprofits. You want to start as a nonprofit corporation. It's not for organizations that are called supporting organizations, organizations called private operating foundations, or other unusual entity types. You'll know if you're one of these entity types, you're probably going to be okay in this area. The form also can't be used for churches, schools, universities, hospitals, credit counseling organizations, and certain other activity areas. Those sorts of applicants always need to provide additional information to the IRS or specialized information to the IRS, so they can't use the easy form. And the easy form can't be used by organizations who plan to maintain or already maintain something called a donor advised fund, which is a special kind of fundraising instrument where donors get a little bit more control and say over how money is spent in your organization. So if you don't think that you have a donor advised fund, you probably don't. But if you did plan on using donor advised funds, you can't use the easy either. All right, so these are the basic easy eligibility rules. Again, when you actually go to apply and use the form, there's going to be an eligibility worksheet that's going to ask you to check yes or no to all the points here on this slide, and also a few additional other points. Let me check the questions, see if we have anything. Uh, ba, 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 ba. Will there be a recording of the webinar? Yes, there's going to be a recording of the webinar. The slides for the webinar are also available on your GoToWebinar client. Do you need a certain amount of funds before beginning? What if you are starting out with no funds? It's okay to start out with no funds. There are some application fees that go along with this process. So as we already hinted at, the 1023 application is either $275 or $600 to file. It also in DC costs you $80 to file your articles of incorporation. So what you can do with those fees is that you can pay them out of pocket at the beginning. And then later on, if you'd like, you can get the organization to reimburse you because those are legitimate business expenses. So down the road, when the organization is raising funds and has its own money, you can reimburse the founder, for example, for some of those filing fees, or you can just donate those filing fees to the organization. That's fine. Can you provide the types of nonprofits that are eligible for this form? So just about any nonprofit is eligible for this form, except for the ones that are specifically excluded. So again, churches, schools, universities, hospitals, etc., those are excluded. Certain unusual entity types are excluded, but everyone else can use the form. So we will, I'll give you a list of some potential ones later when we talk about Ntee Codes. How many board of directors do you need for your nonprofit organization? That's a great question. It depends a little bit on what state you're in, but in the vast majority of states, you need at least 3 people on a nonprofit board. All right, so when you're going out and recruiting your first board, you can be on the board as the founder, but then you need at least 2 other people to make up 3. What happens if you exceed $50,000? We'll get to that in a second. Are there guidelines for valuing your organization's assets? That is kind of more of a CPA finance question. Again, we're going to assign the fair market value to our assets on the list here. If they're really, really intangible, like goodwill or donated services, you don't have to value those, but sort of things that are more classic assets, you do need to either have the cash value or a fair market value of those assets. Is it okay to have an LLC but establish a 501c3 separately? Yes, that's okay. You can be the owner or a founder or have control or influence over multiple different organizations at the same time. You just have to create a new 501c3 nonprofit corporation, and then that's the corporation that'll get the IRS tax status. It is very, very difficult and complicated to get 501c3 for an LLC. So you have to create a separate entity. When are you eligible for sponsorships from companies or corporations? That's really up to the company or corporation, but most of them are going to wait for you to have your 501c3 status from the IRS before you can qualify for a lot of their charitable programs. Can the board of directors be family members for a foundation? We're going to get to that in a moment, Belinda. I'm gonna park that question for a second. Okay, let's keep going. So one question, going back here, $50,000 in gross receipts for this year and the next 2 years projected. One question that I always get is, how do I know if I'm going to stay under 50,000, or what if I'm not sure? So it's a projection, right? Projection is the magic word here, which means to some extent it's a bit of a guess. And no one needs to have a crystal ball. You don't need to be sure. But the $50,000 projection must be reasonable and must be made in good faith. You have to very reasonably and honestly say that sitting here today, we can project that we will not go over $50,000 in this year or any of the next 3 years. So what's that based on? Well, you cannot actually be currently over 50,000, right? Like you can't just straight up lie. You also can't know of incoming receipts that could put you closer over $50,000 in the near future. So if I'm at $45,000, but I have a promised donation of $10,000 coming in next month maybe, or at least very serious conversations about getting another $10,000, I wouldn't fill out the easy form, right? That's too close to knowing that I'm probably going to go over 50 to use the form. So think about promised donations. Think about outstanding grant applications. If you've applied for a $50,000 grant and you're waiting to hear back, but you have a good feeling about it, I wouldn't fill out the easy form. Another thing to do is to look at your actual fundraising trends so far, and then project that growth out over 3 years. If you've been taking in, $5,000 each month for the last 3 months, and that number is slowly ticking upwards, we're probably going to get to 50,000 relatively quickly, right? So if your fundraising trends to date have that upward trajectory, you might be able to project that out and see, yeah, we're probably going to go over $50,000. And the big thing to note here is that the 1023 form is filed under penalty of perjury. So we definitely don't want to make a misstatement. We definitely don't want to say that we're going to stay under 50,000 if we are in fact over 50, or again, if you know of or are reasonably sure that you have incoming receipts that are going to put you over. All right, but at the end of the day, it's still a guess. Something else I tell folks is to think about sort of the sniff test, right? Operationally, can we actually operate the org and pursue our mission in years 1 to 3 while staying under $50,000? Some organizations just really can't do what they want to do with under $50,000, right? Does your organization need staff, equipment, facilities, etc., over $50,000 to just do the basic level of your mission? Are you, if you're like a healthcare facility or something, it's going to be really hard for something like that to operate under $50,000. So sort of looking at your operations as well. A way to flip this question is there a version of your organization that could operate in years 1 to 3 on a totally volunteer or extremely cash limited basis and still be sort of a viable version of your organization? If you can see yourself staying under 50,000 but still operating and still doing your work, then you probably qualify for using the easy form. Another question that I always get is, what happens if we fill out the easy form but then we go over $50,000 in fact in year 2 or 3? There's no automatic penalty if you use the easy form but then actually go over $50,000 in the future. What you do when you get your C3 status is that you'll automatically file a Form 990 with the IRS every year, which is going to tell the agency basically what your financial situation is. And so the IRS will know if you go over 50,000 just by receiving your annual filings. In almost all cases, when you go over 50,000, the IRS has taken no action. Theoretically, the agency could ask you for an explanation or could even revoke or terminate your 501c3 status, especially, again, because you file the form under penalty of perjury, if the agency detects evidence of fraud or that you lied on your 1023 application when you said that you're going to stay under $50,000. But the agency would need to have some evidence of that. And sort of realistically, I have never seen it happen. I've never heard of anyone who's seen it happen firsthand. So you're probably pretty safe as long as you are, making like good faith projection that you'll stay under 50. It's probably not going to be a problem if you then subsequently go over 50 with, you get unexpected fundraising and you go over 50 in the future. All right, this is a good time to park again for questions. Let's see here. All right, any suggestions for who should serve as board members? A little bit out of scope for today's presentation. I will connect with you afterwards if you'd like to talk about that. How do you determine the salary of an organization's president? There is definitely an IRS required process for setting the compensation of your president or your CEO. Not the scope of today's presentation, but I would look at that separately. So flag that as a follow-up item. I currently work a full-time job, but I would love to work on a nonprofit on a full-time basis. Again, something we can talk about later, not in the scope of today's presentation. Are personal taxes a factor? I'm not exactly sure what that question means, but generally speaking, no. You do this application through the nonprofit corporation. You do not do it using your individual, like social security number or anything like that. So personal taxes should not be a factor. Should you file the long form if you go over $50,000? So again, if you use the 1023 easy and you thought you were going to stay under $50,000, but then let's say in year 2 you go over $50,000, nothing happens. You don't have to do anything. You don't have to file an additional form. There are no automatic penalties. You don't have to worry about it. All that's going to happen is in the course of your regular 990 filings, you'll inform the IRS that you went over. They theoretically could then use that as an opportunity to ask you some questions or modify your C3 status or ask you to file the full form. But 99.999% of the time, they won't do that and you'll be fine. All right, so that's the situation. Okay, Okay, I want to kind of go away a little bit from the mechanics of the form and sort of take the scope out a little bit and talk a little bit more about the EZ. The EZ was introduced in 2024 as the agency was facing really serious processing backlogs. So it's really a way for the IRS to reduce its own workload. The agency receives over 95,000 nonprofit applications every year. They were like, if everyone is using the full form, we're never going to be able to process all these applications. So they introduced this like much shorter, much simpler form as a response to that. And today, over 70% of applicants do use the EZ form, and the approval rate on the EZ form is basically close to 100%. I think I saw this week that like 1 in 2,200 applications get rejected or something like that. So the approval rate is very high. Um, because of this situation, the EZ form has received a lot of criticism over time. People say that it fails to provide the IRS with enough information to make informed approvals. And they also say that the form is so simple, it really fails to give you, the applicant, enough information and structure and context to understand what's required for a nonprofit from a governance perspective, from a financial perspective, and from a legal compliance perspective. And I agree with those criticisms. I think a lot of us who work in the nonprofit legal space agree with that criticism. So I don't want people to think that just because the EZ form is cheaper and easier, that they have to go with that option if they qualify. Even if you qualify for the EZ, applicants might choose to still file the standard form because they want the opportunity to learn about governance and compliance requirements through that application process, because they value the more rigorous vetting. One analysis found that the IRS had an error rate of EZ approvals between 26 to 42% in the mid 2010s. So that means that 26 to 42% of organizations approved on the EZ form, if you really dug in and looked more closely, probably should not have been approved. And so just getting approved through the EZ process doesn't assure that your organization is actually properly organized and legally operated. So for folks who really want to do it right and want to reduce the risk of problems down the line from non-compliance, maybe filing the full form could be the way to go. Also, some applicants want a full Form 1023 application to show potential donors, grant makers, etc., instead of only having kind of the EZ application to show. The 1023 can be requested by anyone, including the public at large. So some folks feel a little bit more competitive when it comes to competing for grants or contracts or other funding opportunities when they have a fully fleshed out EZ application to show folks. It kind of, especially as a startup, it sort of establishes your bona fides a little bit more strongly. And also, we've talked about this, a lot of folks don't want to worry about the consequences of flipping over the $50,000 threshold. As we said, there's probably not going to be any consequences if you fill out the EZ, but then inadvertently go over $50,000. But some folks are a little bit more risk averse and they'd rather not worry about it. So they just file the 1023 full form instead of the EZ for that reason. All right, so some of the reasons why you might want to think about the choice between the EZ and the full form maybe a little bit more closely. Okay, so now let's take this opportunity to really get into the 2023. What I'm going to do is just walk you through the entire form. It's all online. You can't file it in paper, so I have screenshots of the form that we can walk you through. A question: if you make $50,000 after 3 years, do you still retain your tax exempt status? Yes, after 3 years, you can definitely make as much money as you want, and it does not affect the choice to do the 1023 EZ is not relevant. Okay, this is the anatomy of the 1023. There are 6 sections and then an instructions document. One thing I'll say up front is that the instructions are actually really good. So they're a separate document. They walk you through each line of the form. And also, if you fill out the form online, there's a little question mark pop-out button on most of the questions, which will link you to what's in the instructions. So, we're going to go over it on this webinar, but just know that when you actually go to do the form, there are really useful instructions as well that you can turn to. Let me check the questions again. Are there I'm getting a question regarding bylaws. Are there protocols or requirements for bylaws that the IRS is looking for? We're going to get to that in a moment. The IRS actually probably cares a little bit more about what's in your articles of incorporation than what's in your bylaws. When it comes to bylaws, those are really internal operating rules for the organization. They're a little bit more flexible. We have a really good webinar on nonprofit bylaws and template nonprofit bylaws in our resource library for folks who want more guidance on bylaws. But hold the phone on what we need to have in your articles. All right, so let's go to part one of the form. This is the first page of actual questions. The very first thing that you do is check that you've completed the eligibility worksheet, as we've talked about. So you're going to check on yes on that because you're going to click on the worksheet and go through it. And then we're going to talk about those basic eligibility questions again. You're going to check, have your gross receipts exceeded $50,000 in the past 3 years, and or do you project that your gross receipts will exceed $50,000 in the next 3 years? You know, you should be familiar with this now. You're going to click no. Do you have total assets, the fair market value of which is in excess of 250? Again, you're going to click no. Otherwise, you're not eligible to fill out the form. Then in part one, you're going to start providing your contact information. So the name of your organization, address, all that stuff. In 1A, the name of your organization, I want to note that this name should exactly match what's in your articles of incorporation. Again, your articles are like the constitution of the nonprofit, and they're going to establish what your official name is. If you don't like the name in your articles anymore, go and amend the name before filling out this form. You can't just create a new name and put it in line one. It has to exactly match what's in your articles. Your EIN number in line 2, you'll apply for that before you fill out this form, so you'll already have that ready to go. Something to note is number 3, the month that your tax year ends. This is where you get to pick what your fiscal year is. Again, your fiscal year doesn't have to be the calendar year. A lot of nonprofits use a calendar year fiscal year, but other nonprofits use a like July to June fiscal year. Others do a cycle that starts in the fall. So it's up to you what you want your fiscal year to be, but you're going to decide that in box 3. I encourage everyone to check their bylaws to see, because a lot of bylaws already establish what your fiscal year is. So if your bylaws say that your fiscal year is January to December, make sure that you reflect that here on the form. The user fee in point 7 is going to be auto-completed. It's $275, and you'll pay that at the end. The next section of this part is you're going to list out all of your officers, directors, and trustees. So first, you're going to select the number that you have. Again, it should be at least 3, because in DC and most jurisdictions, you need at least 3 people on your board. And then you're going to provide the name and contact info for all those individuals. So just like a definitional exercise here, a director is someone on your board, right? They sit on the board and they vote on your board. Your board is the governing body for the organization. It makes all the big decisions relating to the organization. Officers are individuals with unique leadership and management responsibilities in your nonprofit. So in DC, the core required officers are a president or chair, who's like the management officer of the organization, and a treasurer, who's the financial officer, the chief financial officer. And functionally, you also need to have a secretary or someone in charge of keeping your books and records, okay? So that's a president, a treasurer, and a secretary. As your nonprofit starts making money and it can hire staff, a lot of organizations will hire a chief executive officer or an executive director. That person is also an officer, and that person is sort of the chief management officer of the organization. So for most of you, you'll have 3 directors on the board at least, and then you'll also in DC should have a president or a chair, a treasurer, and a secretary. So that's what you're going to be putting into that title box there on the right. In a lot of startups, people wear multiple hats. They'll sit on the board of directors as a director, and they'll simultaneously also serve as the president or the secretary or the treasurer. So you can be a director and officer at the same time. All right, hopefully that makes some sense. A summary of what we just talked about: ensure that your full name on line 1 matches your articles. Check your bylaws to see for your fiscal year in line 3 if they already speak to when your fiscal year is. Oh, a note, when you provide everyone's contact information in line 8 for your officers and directors, you can use the organization's street address if you have one, if you have an office, or if you've gotten maybe a home occupancy permit for someone's house to be the head office. If you have some sort of commercial street address, you can put that in as everyone's contact address. You don't need to put in their personal street addresses. But if you don't at this point have any kind of office address, you're going to need to put in everyone's personal home address. All right. And then finally, that definitions that we talked about, directors are voting members of your board. All directors are exactly the same and they have the same job. They're just a vote on the board. But officers are those with the more specialized duties. Alrighty, let me pop out our questions again, see how we're doing. Can your bylaws and articles change after filing for nonprofit status? Yes, you can amend your bylaws by filing a form with DCRA or whoever incorporated your organization to amend those. That's for your articles. When it comes to your bylaws, you can change them by a vote of the board, usually. So the bylaws themselves should have a section in them saying what the requirements are to amend the bylaws. Usually it's like a 2/3 vote of the board, and then the board can vote to change the bylaws. If you don't have a location yet, and then you get a location, no, you don't have to reapply for nonprofit status. You'll just update both the IRS and the district government with your new location when you file your annual or biannual returns with those agencies. So the next time, basically, that you communicate with those agencies, you'll have an opportunity to update your street address with them. Okay, let's move on to section 2 of the form. This is talking about your organizational structure. So to complete the easy, you must be a corporation, an unincorporated association, or a trust. Almost all of you are going to be nonprofit corporations. It is possible to be a nonprofit without being a corporation. I haven't touched on that possibility, and there are a lot of complexities and considerations there. The vast majority of you will be applying for nonprofit status as a nonprofit corporation that you've incorporated in DC or another home jurisdiction. You're going to check box 2 to attest that you have the organizing document necessary for the corporation. So in this case, that is your articles of incorporation. We've already touched on that. In DC, you can't incorporate a nonprofit without having some kind of articles of incorporation. So all of you should be able to check box 2. Your date of incorporation is going to be on your certificate of incorporation. So put that date in when the nonprofit was incorporated. And then again, from a drop-down list in 4, you're going to select a state of incorporation. Okay. That's pretty basic. Question 5, 6, and 7 are really interesting. They're asking what's in your articles. All right. So in question 5, section 501c3 requires that your organizing document limit your purposes to 1 or more exempt purposes. Check this box to attest that your organization has the limitation. All right. So you're gonna check yes. Question 6 requires that your organizing document, again, these are your articles of incorporation, must not expressly empower you to engage in activities that are not in themselves in furtherance of your nonprofit purpose. Okay, so you're going to check the box saying that you have that language in your articles. And then question 7 requires that your articles provide that upon dissolution, your assets are going to be distributed to other charities, you know, and not be just handed out to like your board or whatever. So you're going to check that your articles have that dissolution provision. You need to check all 3 boxes to move forward. I guess my big tip here is to actually read your articles. A lot of people complete the section and check the boxes without actually looking at their articles to see if they have the required language inside of them. So, and it's extra likely that that happens because in jurisdictions like DC, the DC government will allow you to incorporate a nonprofit using its form DNP1 without having any of this IRS required language in it. For those of you who have done it recently, DNP1 is a really bare bones basic form where you just put in your name and your registered agent and a little bit more information and you're good. The agency will approve and incorporate your nonprofit just with that basic amount of information. But you need more in there to satisfy the IRS for 501c3 purposes. So there's a miscellaneous provisions box in the DMP1, which is where you copy and paste in the additional IRS required language to qualify for C3 status. A lot of people miss the miscellaneous provisions box and don't understand that they need to add extra language in there in order to qualify for 501c3 status down the road. So I encourage everyone to pull up their articles of incorporation, or for the DC folks specifically, their Form DNP1, and look at what's in there and see if you have the IRS required purpose limitation clause and the dissolution clause. If they don't include the required language, you're going to have to amend your articles and refile them with DCRA or whoever your incorporating agency is before you can submit the 1023 application, because you're not going to be able to check yes on those 3 questions saying they have the language in there if you don't have the language in there. And I just want to give people a sample of like what these clauses look like. So an exempt purpose clause will say the purpose of this corporation is organized as follows. You're going to have a specific charitable purpose, like to educate and empower school children in Ward 3 or something. And then you're going to have most likely a catch-all, what you see in B, which is to engage in any other religious, charitable, or scientific purpose. So you're going to have a specific purpose, which is your real specific mission, and then a catch-all to allow you to do give you more flexibility down the road to do some other things. So that's an example of a purpose clause. That limitation of activities clause, this is pulled out from our template articles that we give clients. It's kind of long, I'm not going to read it all, but as you see in point A, this corporation shall not directly or indirectly engage in any activity that will prevent it from qualifying for 501c3 status. And then in B, you see a really important clause, no part of the net earnings of the corporation shall inure to the private benefit of its members, directors, officers, or other private persons. What that is saying is that we're going to use our money to advance the mission. We're not going to use the money to just give people free money. Now, that doesn't mean you can't pay like staff or salaries, because when you pay staff, you're getting services in return. It just means you can't give the money away for nothing in your nonprofit. It has to all redirect to advance your mission. All right, that's a limitations clause. And this is a dissolution clause. Upon dissolution of the nonprofit, its assets shall go to other nonprofits. So you see, so all this kind of language should be in your articles. You need something like these clauses in there for you to be able to check the boxes that we saw in the last slide. All right, we're going to keep moving forward. This is section 3, your specific activities. The box is going to give you an opportunity to provide a narrative description of what your mission and activities are going to be. The next thing it's going to ask is for something called an Ntee code. We'll get to that in a second. And then finally, in number 3, you're going to check all the the category of 501c3 organization you are. And the main choices there are charitable, religious, educational, but there's also scientific, literary, public safety testing, international or national sports competition, and prevention of cruelty organizations. All right, so I'll dig into these a bit. Make sure that your description in box 1 matches whatever's in your articles. If your articles already describe your mission and significant activities, make sure that there's a match there. For line 3, when we're checking these boxes in the bottom here, charitable and educational are your most common choices, and most people will be checking one of those 2. I've given you the definitions here. I'm not going to dive into them. I'll just say that they're both very broad. Charitable is everything from relief of the poor to lessening neighborhood tension to defending human rights. Educational means training individuals and also the education of the public on subjects useful to the individual and beneficial to the community. So educational organizations are things that directly educate people, but you can also think of your advocacy organizations or your kind of policy focused organizations. Those might be categorized as educational for the purposes of your application. If you think you might be in any of the other categories like public safety or literacy or cruelty prevention, just check the instructions for the easy form for a description of what those categories mean. Let me talk about the Ntee codes. Ntee codes are developed by a third-party organization called the National Center for Charitable Statistics. It's used by some funders and databases as a way of categorizing nonprofits. There's no right answer for what your Ntee code is. Just look down the list of available codes and find the code that best fits your organization's activities. They're organized in top level letter categories. So like A codes are arts organizations, C and D codes are environmental or animal organizations. So start in the categories that you think you might fit, and then dig down into those categories to find a specific code that matches what your organization does the best. A list of Ntee codes can be found attached to the instructions for Form Easy, or there's a link online for where you can get the codes. This is a picture of what the hard copy list looks like. So if we see, environmental protection are the C codes, and then if you're a recycling program, you're C27. Okay, so you're gonna mental health interventions, those are the F codes. If you're an alcohol substance prevention and treatment program, you're F20, right? So you're gonna start in the high level category that you think fits, and then you're gonna pick the code that's closest to what you do. Again, there's no right answer, but it might help you down the line when organizations are trying to look for alcohol prevention organizations that they want to support. They might search using the Ntee code, and so it would be useful if you were in that category. The next section of part 3, it's going to ask you to just check a box to attest that you are going to abide by this point list of rules. The rules are refraining from supporting candidates in political campaigns, not using your earnings to benefit private individuals. We've talked about that. Not furthering non-exempt purposes more than insubstantially. Not being organized to operate a trade or business, not devoting more than an insubstantial part of your activities to lobbying, and not providing commercial type insurance. The funny thing is, each of these points we have like a whole 1-hour webinar on, and the IRS is just letting you check a box and saying that you're not going to do any of these things. I think my biggest tip here for this question is A, look at the instructions. The instructions are going to provide you with more information, and then B, consult our resource library to kind of understand more what these are talking about. Like that limitation on the amount of lobbying that you can do, really, really complicated. Okay, so if you do think that you're going to be doing some lobbying, educate yourself a little bit, reach out, ask some questions before you check yes on the box. We don't want you checking yes and starting an organization just to find out down the line that you can't do the kinds of activities that you really wanted to do. Same thing with a trade or business. There are some money generating activities that nonprofits can do in a sort of unlimited way because it directly advances their mission. But there are other money generating opportunities that look too much like a for-profit business that nonprofits can only do a limited amount of. So if any of the things in this point list raise a red flag for you, raise an alarm bell, do some research and ask some questions before checking yes and proceeding through this part of the form. In the spirit of checking yes or no, there are some more yes or no questions in this section of the form. Again, checking yes or no if you attempt to influence legislation, if you're going to pay any of your officers or directors. That question 6 is relevant for most people because you might be planning on having a paid executive director, for example, and so that is a paid officer, and you would click yes on that box. But you're going to donate funds to pay expenses for individuals. If you're starting like a scholarship program or some sort of mutual aid program where you're just going to be giving money directly to people, you might click yes there. Or you conduct activities outside the United States. So these are all questions that are asking about kind of more high risk activities that the IRS cares about. There's no wrong answer per se, but if you answer yes, the agency could theoretically ask you for some more follow-up information. It's very rare, it almost never happens, but answering yes to these questions could prompt the agency to ask for a bit more information about your activities. Okay, and that continues on through question 12. So like, do you engage in financial transactions? Do you have unrelated business income? Are you going to operate bingo or gaming activities? And will you provide disaster relief? So just answer yes or no, depending on the honest answer that you have to these questions. Just know that some answers might require the IRS to ask you some follow-up questions, although the chances of that happening are very, very low. All right. If you have questions about anything that these questions are talking about, again, feel free to reach out or check the instructions to the forum. They have a lot of good context. All right, We're getting near the end, which is good because I think we're going to go a little over time. Part 5 is about foundation classification. This is maybe the #1 area where people mess up. Whenever I work with clients who have done the easy and they've had some problem or they've checked the wrong thing, it's in this section. So let me give you the background. 501c3s come in 2 kinds of flavors. They come as public charities or private foundations. Most of you are probably going to be a public charity, or most of you probably want to be a public charity. The difference is the source of income. Public charities receive a significant chunk of their money from the public, while private foundations are usually primarily funded by a single benefactor or a single business or a family trust or a small group. Private foundations are private in that most of their money comes from 1 or 2 places instead of the public at large. Also, most private foundations, they just give money to other entities. They don't usually operate their own programs the same way that public charities do, although some foundations do operate their own programs. So as I said, most of you probably want to form a public charity. Private foundations are subject to additional reporting requirements, and they're not eligible for a lot of 501c3 funding opportunities. A lot of those funding opportunities are meant for public charities that are operating their own programs. All right, so I have another quick chart here. This stuff gets pretty technical, but so I'm not going to dive deep into it, but your big takeaway is that private foundations are more complicated to operate. They are not quite as tax advantaged as public charities are, and most of you want to be public charities. One thing that relates to a question that was asked way back at the beginning is about who can be on your board. So in a public charity, a majority of the people on the board have to be unrelated. That means they can't have financial relationships to the organization, and they should also be unrelated to each other in terms of family relationships and also business relationships. On a private foundation, it could be a tighter kind of tighter circle. You can have a board where everyone is related to each other. Because private foundations are subject to more scrutiny, the benefit that they get is that they get to be a little bit more private, a little bit more closed. So to be classified as a public charity, you need to meet one of 2 tests. There's what we call the A1 test and the A2 test. So under the A1 test, this means that at least 1/3 of your support, and again, this is a projection, but at least 1/3 of your support will come from public sources. That includes small individual donors, government sources, and other public charities. Small donors in this case are donors that give up to 2% of your total receipts every year. If donors give more than 2%, the amount over 2% is discounted for purposes of calculating that 1/3 threshold. And we'll get into an example that's going to flesh that out in a second. If you get money from the government or from other public charities, that's not subject to the 2% limit. Even if you can't hit this 33% limit under the A1 test, there's a backup test that requires just 10% of public support and a more subjective facts and circumstances test. The A2 test is when at least 1/3 of your support comes from either public sources or what we call exempt activity revenue, which is self-generated income that directly advances your mission. Also, no more than 1/3 of your support can come from investment revenue or unrelated business income. Again, this is going to get a little bit technical. We'll go into some examples that'll flesh it out. Most of you, I would say 95% of you, are going to be qualifying as a public charity under the A1 test, which again means that at least 1/3, but for most of you, it'll actually be a lot more, but at least 1/3 of your money is going to come from donors, from the government, and or from other public charities. Okay. And this analysis uses a mix of actual revenue, so money that you've made up to date, and then projected revenue over a 5-year term. I see we're hitting the 1 o'clock hour. I have about 10 minutes, I would say, so apologies to anyone who needs to drop off. This session is being recorded and will be emailed out to everyone, so you can catch up on the recording. Okay, so let's go over some examples. So ABC nonprofit, you have $50,000 in annual receipts. You're funded 30% by government grants, 30% from public charities, 20% by a single major donor, and 20% by small donors. Does this charity meet the public support test? Yes. This nonprofit easily passes the public support test because over 80% of its money comes from public sources. Why is it 80 and not 100? That's because that single major donor who gave 20% or $10,000 all of those donations are subject to the 2% threshold. So only 1,000% of their donation counts towards the public support threshold. The remaining 9,000 is disregarded. So that's why this organization isn't getting 100% public support. That one big donor, it gets subject to the 2% threshold. Okay. ABC nonprofit with $30,000 is funded 40% by a single major benefactor, 40% by a private family trust, and 20% by small donors. So this nonprofit does not automatically pass the A1 public support test because both its major benefactor gift and its family trust gift are, like above, capped at 2%. So those only can contribute $600 each. Even with the $6,000 in additional small donations, we're not hitting $10,000, which is what we need to hit under the traditional public support test. You know, it's getting a little complicated. I know you guys didn't sign up for math, but most of you will be probably in that category of nonprofit one, where you're going to be getting donations from a mix of small donors, other charities, and government grants. I want to give an example of the A2 test. ABC Nonprofit Orchestra. Okay, it's an orchestra. It gets $100,000 each year. 60% of it comes from ticket sales, 10% from additional small donations, 20% from selling beverages at their shows, and 10% from a major benefactor. Okay, so this is that self-generated income that I was talking about. Self-generated income is fine under the alternative A2 test. So we're actually at over 70% with the A2 test because we have the 60% from the exempt activity and the 10% from small donations. The 20% from beverage sales does not count as support under any of these tests, but it's okay because we're under 30% there on the beverage sales. So it's not violating the rule. And you know, that 10% from the major benefactor, again, that's going to be subject to the 2% limit. So not all 10% of that is going to count towards public support. All right, so there's some math involved. There's information in the instructions for how to do these calculations. I want everyone to step back and just realize most of you are probably going to be fine under the A1 test. It's only 1/3. Most nonprofits get 100% or close to 100% of their donations from sources that qualify as public support under the A1 test. I just don't want people to get confused. I think this is my takeaway. This is what the actual form looks like. So first, it's going to ask if you're a church, school, or hospital. You're probably going to say no. Then in question 2, you're going to select which public support test you're going to use to qualify as a public charity. You select A if you think you're going to be under the A1 test. You select B if you think you're going to be under the A2 test. And then you're going to select C if you're in the very, very rare situation where you're an organization that benefits a college or university, or if you're owned by a governmental unit. That's probably not anyone on this call. So you're going to go A or B. If you don't qualify under A or B or C in question 2, then you're automatically a private foundation under number 3, and you have to check the box saying that you're going to operate the way that a private foundation needs to. What I see clients doing is they get to this page and they get really confused and they don't understand what any of the options under question 2 are. I mean, it does look very technical. So they just go with option 3 and they accidentally classify themselves as a private foundation when they really wanted to be a public charity. Okay, so that's why we had all the math and all the sort of context setting. I want you to select the right option under question 2 if you want to be a public charity, and skip question 3. You do not want to be a private foundation if you intend to be a public charity. All right, we're going to breeze through the rest of this. Section 5 is if you're using the form to reinstate your nonprofit after being revoked. This is not for people who are starting organizations for the first time. This is for people who have started a nonprofit in the past, failed to file their Form 990 for 3 years, and had their nonprofit status automatically revoked. If that's the case, in some circumstances, you can use the EZ to revive your organization. But again, if you're filing for a new nonprofit for the first time, you can skip part 5. And then part 6 is just the signature page. You're going to type in your signature. You're going to date it. You're going to type in the authority of the signer, and then press continue. Again, you're checking a box saying, by the way, that you're submitting this form under penalty of perjury. Okay, so make sure that everything on the form is accurate. And that's it. I'm going to go over really quickly just sort of the filing process. You do all of this on pay.gov. which is the government's web portal. First, you're going to create a company account for your nonprofit. Again, you don't do this through your personal account. You create a company account through the nonprofit. Once you log in under your company account, right there on the homepage, in the bottom there's a box that says apply for IRS 1023 EZ. So you just click the link there, and you're going to be transported into the online form that we've been clicking through all presentation. A note about payments: you can pay the $275 fee using ACH bank transfer or with a debit or credit card. All right, that is it. I want to thank our law intern, Jonah, for assisting with the slides in this presentation. There's my contact information if you want to reach out and ask more questions. And here's some useful links. We have our overall nonprofit resource library. We have that starting a nonprofit microsite that has a lot of great information for startups. And then we have also a microsite on IRS ongoing compliance. If I have a closing remark, it's that I want to turn back to that criticism that we saw earlier, that the easy form is arguably too easy, that it doesn't give filers enough information about what they need to do going forward to comply with the law and to operate their nonprofits appropriately. I agree with that criticism. So if you are going to file the easy form, please stay in touch and use our resources, use our 8-part training course that we do every spring that trains you on nonprofit business law. Go through the resource library, reach out and ask questions to us directly, but really, you're going to need to use those resources more than someone who fills out the full form, because those full form filers are going to have to answer all those questions on the front end. For you filing with the 1023 EZ, I get that it's cheaper, I get that it's easier, I get that it's faster, but I do encourage people to then do more work on the back end to really brush up on these topics and to make sure that they understand what they're getting themselves into. Now, I know that we're over time, but for folks who can hang on, I'm going to go through the rest of the questions to the best that I can. So if you have last minute questions, please keep them coming. But I will try to do as many of these as we can while I have them, while I have you here. Am I going to review executive compensation? No, executive compensation, again, is not a topic in this webinar. You will find a really great webinar that we did very recently on executive compensation on that IRS compliance microsite. So I recommend that you go there. Is the best way to incorporate through DCRA? Yeah, you have, ultimately all of your incorporations have to go through DCRA. If you're using something like LegalZoom, they're just going to help put together the paperwork for you, but they're also going to send it through DCRA. You can use LegalZoom if you want. It does make the process a little easier if you have the funds to do so. But a lot of people just do it themselves directly through DCRA. In our Starting a Nonprofit microsite, there is that Starting a Nonprofit guide. That guide includes a link to articles of incorporation, includes a description of the DCRA incorporation process. It should give you the information you need to do the incorporation yourself. Basically, all you do is you draft up your articles of incorporation, you go online, you fill out DNP1, you attach the extra language that you need for the IRS to the form, and then you pay $80 and you submit the form. The form itself is like 2 pages. So it's not so difficult and complicated that you can't do it yourself directly through DCRA. That, again, if you want to use LegalZoom, you can still do that. Can like a husband and wife or a mother or father be on your board? Yeah, you can have those people be on the board. The issue, though, is that because they are related to one another, a lot of the times there's going to be some conflict of interest that will prevent them from participating in the board discussion. So let's say you have a husband and wife and one other person on the board. Then it's decided that the wife is going to be hired as the first ever executive director of the organization, and she's going to be paid a salary. So the board has to vote on whether to hire her and has to vote on what her salary is going to be. But the wife herself obviously can't vote on that because she's the person being hired. She has a conflict of interest. Also, her husband cannot participate in that vote either, because as a family relative, he also has a conflict of interest in hiring her and approving her compensation. And then we're left with just one person sitting alone on the board. They can't have a binding vote on whether to make that decision or not, or at least we want to avoid making them be like a solo vote on that issue. So the issue if you have people with family relationships or other relationships on the board is that you want then to grow the board so that if those individuals are eliminated because of a conflict of interest, you still have enough people to discuss and to deliberate and to vote. So in that situation, if we had 5 people on the board, the husband and wife could sit off for a decision because they're conflicted, and we would still have 3 people to discuss and to vote on an issue. Okay, so it's not illegal to have relatives or other folks on a board, but we do want to have a majority of the folks on the board be unrelated as a best practice. I think Stuart was asking a question about our Ntee codes. Can an organization have multiple codes? The form only allows you to drop 1 code into the application. So I think for the purposes of the EZ, you are limited to the 1 code. I'm not sure if places like GuideStar or if other places that use Ntee codes allow you to put on multiple codes. But just at least when it comes to the 1023 EZ, you're gonna have to choose 1 code to stick with. Okay. How can one change their status if you originally selected a private foundation but now want to change to public charity? This is a really complicated question, unfortunately. There is an IRS form that you can file to request a change of status. And if you did it through the 1023 EZ and not much about your financial situation has changed, you can probably do it through that change of status form. So you can reach out to me separately if you want specific information about what the form number is and all that stuff. But there is an IRS process that allows you to change from private foundation to public charity. It's a lot easier if you catch the mistake really early and you make the mistake and you make the change really early. It gets a lot harder to do if you've been operating for a few years and then decide to change. That can slow down the process quite a bit. Does the credit card have to be the name of the association? No, the card that you use to pay the filing fee can be any credit card. All right, those are the questions that I see so far. Thank you everyone for sticking with me. Reach out if you have any additional questions. It's been a pleasure speaking with everyone today. All right, take care. Bye.